Wow, what has just happened today? Tesla is down 6.08% today, down to $379.28. Now, why is this the case? Um, well, as you guys may know, earlier in the week, I made my my Tesla deliveries prediction video, and deliveries have just come in today, and let's just say they fell short quite a bit. I was down by like 11,000 units, and yeah, I was a bit more bullish than Wall Street. Wall Street was down by a little bit less, but let's just see what those numbers were. So if we go over to Tesla's Q4 2024 production and deliveries. Now, if we go over, let's just look at the production and deliveries. So production is 459,445. Deliveries is 495,570. Now, this is a miss of about 11,000 from Wall Street, and it's about 15,000 from me. And so, why is this the case? Well, mainly it's because of the other models that came in a lot lower than what everything was predicting. Model 3 and Y, that was less, was about on par, but the other models were very disappointing. Now we can see that energy storage deployments were up massively, and that was the saving grace. They deployed 11 gigawatts hours of energy storage. So yeah, that's a massive record for energy, but is it enough? Ultimately, these results were very disappointing for Tesla investors. That's why the stock is down 6.08%. But were they really that bad? Has the market overreacted? Well, obviously nothing said in this video is financial advice, but I think yes, a bit. Yes, the deliveries missed, but the energy, was a record, and the energy isn't the main talking point when we're talking about these numbers. The deliveries are, and everyone heavily focuses on the deliveries. But if we actually look at the energy deployed, if we go back over to Tesla's website, the energy deployed is 11 gigawatts. That's getting more and more, and the growth is actually accelerating in that business. It's not slowing down. And the margins on that revenue is greater than the car business if we don't include software margins, when we like FSD and stuff. If we just look at the actual sale of the vehicle, the energy is a lot better in terms of margins. So if we're looking at if the 6% decrease in Tesla stock is an overreaction or is fair, we have to look at why this even happened. Now, it's because the stock market tries to value companies based off all the available information. Now these production delivery numbers were new information entering the table, so people had to change the way they value the company, and obviously a lot of people are selling the stock because of that. But ultimately, the bigger driver for the change in the stock price is going to be the earnings, not these delivery numbers. These delivery numbers are just a precursor to the earnings. And ultimately, how does this affect earnings? Because that's the real thing that we should be looking at. Ultimately, I don't think that earnings are going to be like this. It's going to be a game changer for earnings, because the vehicles, is getting a smaller and smaller part of Tesla's business. Because we've had release of Virgin 13, so we probably will see an increase in take rate, more FSD revenue. We've got the Bitcoin that has just skyrocketed, so Tesla's Bitcoin holdings will increase. That will show up. We've got the energy, which will have a higher margin, and we've also got this news will mean that Wall Street analysts will lower their Tesla earnings. Now, I thought Tesla was going to beat before, Like even with these bad numbers, I think if Tesla earnings will still beat with these bad numbers, but with analysts, like obviously some analysts will just keep it the same. Some won't change it at all. Some will bring it down a bit. So that should bring consensus of earnings down a bit. So it should be even easier for Tesla to beat in earnings. So ultimately, that's what it comes down to: is does this really have a meaningful impact on earnings? And yes, it's meaningful, but it won't stop the like. If anything, it will help earnings because it will bring down earnings expectations, which is what I'm trying to say. Because it's all about the stock market's always future thinking. It's looking into the future, like, okay, what do we expect? Now this, lowers the expectations of earnings. If this was really good and earnings expectations went up, and actually it was overthinking how well earnings were going to be, then it's like, oh, okay, yes, and then earnings only beat by like 0.5%, then the stock will probably go down. But if we have low earnings expectations and the stock beats, even if it is only by that 0.5%, then the stock will increase. Well, not always guaranteed, but you know what I mean. So it's all about expectations. If we're expecting it to be bad and there's like a 0.5% beat, then it's going to be a good result. But if we're expecting it to be good and it's the same beat, then yeah. So anyway, guys, I hope that has helped you kind of understand where Tesla is at with these deliveries. Ultimately, this doesn't really change anything. I'm still dollar cost averaging whenever I get my pay slip in. I actually just got paid today, so I'm going to be buying more Tesla shares when the market opens. And you guys will see that in next month's portfolio update. I've just done a portfolio update. If you guys want to see where I'm at now, the current balance of that unfortunately was before the drop, so it is a bit inflated. Anyway, thank you guys for watching. Please make sure to subscribe. We are on the road to 1,000 subscribers. The goal is to hit 100 subscribers in January, so please subscribe down below and make sure to like the video to help this video get recommended by the YouTube algorithm. Anyway, that's it for me today, and I'll see you in the next one. Goodbye.